What's up YouTube? Welcome back to my channel. For those of you that don't know me, hi, my name is Miguel and I am a long-term dividend investor sharing my journey here on YouTube to a $100,000 dividend investment portfolio and hopefully being helpful to y'all along the way. And I have a very exciting video for y'all today. I'm going over all the dividends that I got for the month of September 2021, which is really exciting because my dividend portfolio just recently hit $12,000. And every single week I'm getting more and more dividends and buying more and more stocks of companies. But before we get into that, don't forget to subscribe to the channel if you have not already. Leave a like on my video, it helps out the growth of my channel so much. And then comment if you have any of the same stocks or you got any of the same dividend payments this month. Now let's roll the intro. Now if you have been subscribed to my YouTube, you know that every single week I go over all the buys that I did do for that week to help keep y'all updated with my journey to a $100,000 dividend investment portfolio. So as we can see, hopping into my portfolio, it's currently sitting at $11,953.66. On the day, we're down $116.19 or about 0.96%. On the week, we are down $27.56 or about 0.23%. On the month, we are down $333.83 or about 2.72%. On the 3 months, we are down $168.10 or about 1.39%. And then on the year, we're up $1,247.99 or about 11.66%. As y'all know, I am a long-term dividend investor building this portfolio from the ground up over the course of the next 25 plus years or so. So just like when the pandemic hit, I'm not scared at all about this dip in the market. I'm actually buying more stocks right now because ultimately the people that panic sell right now, and as we all know, time in the market is going to beat trying to time the market. So I am just going to continue to do what I have been doing and buying the dip so I can get more shares of the stocks that I love at a cheaper price. So hopping into the buys that I did do for this week, I actually only did one purchase this week, which was buying more Costco. So I bought $103.58 worth of Costco, which ultimately gave me 0.23 shares, and that was at an average cost of $447.80 per share. And then now hopping into Costco, I now have 2.14 shares, and that's at an average cost of $401.06. And then as we can see, I'm still up overall $102.90 or about 11.97%. And I have only been invested into Costco for about 3 months now. That's an amazing return and the third highest in my portfolio overall. So I know I'm doing something right when investing into Costco here. And I know ultimately in the long run I want to have about 10 shares of this before I taper off my buying of Costco. So I am going to be buying Costco aggressively over the next couple of months. Probably over the next year until I get 10 shares of this. Because like I said, I just really believe in Costco's business model. And I think that their stock speaks for itself because if we hop into the past 5 years, they're up $297.35 or about 195.46%. Again, even if they don't have that crazy return in the next 5 years, they're still going to continue to go up and pay a pretty solid dividend. So as it stands, my game plan is still continuing to dollar cost average into Costco until I get about 10 shares in. Now that we did go over the buys, or the buy should I say, for this week in my dividend portfolio, we're going to go over all the dividends that I did make for the month of September 2021. In total, I had 10 different dividend payments over the course of September, with the first one being Johnson & Johnson. So at the time, Johnson & Johnson paid me $2.18 for having 2.05 shares, and they were paying about $1.06 per share. Now hopping into Johnson & Johnson, I still have 2.05 shares, and that's an average cost of $156.78. I am up overall $14 or about 4.39%. I want to buy more shares of Johnson & Johnson, I just haven't had the opportunity to recently, but I do see Johnson & Johnson being the powerhouse to my healthcare sector in my portfolio, so I am going to continue to dollar cost average into Johnson & Johnson. Now the second dividend that I got was from Microsoft. They paid me $1.92. At the time, I had 3.42 shares, and they were paying about 56 cents per share. And then, of course, hopping into Microsoft, I still have that 3.42 shares at an average cost of $219.34, and I am up overall $227.56, or about 30.25%. This is the biggest return in my portfolio so far. As you can see, I have about $1,000 in here. I do want to bring that up to about $3,000, but I am only able to put in about $100 every single week into this portfolio. Hopefully in the near future I can put in more, but for the time being I am just going to dollar cost average into Microsoft. The third dividend payment that I got this month was from AG&C. I got $1.66. At the time I had 13.8 shares, and they were paying about 12 cents per share. And then hopping into AG&C, I still have 13.8 shares at an average cost of $15.27. And then I am up overall $12 or about 6%. Now agency is a monthly paying REIT with a pretty high 8% dividend yield. This is one of the riskier stocks in my portfolio. Maybe in the future I will buy more, but for the time being it's been a solid stock for me and it has paid me that dividend every single month. Now the fourth dividend payment that I got for the month of September was from Target. They gave me $1.78. At the time I had 1.97 shares and they were paying 90 cents per share, which gave me that $1.78. Now hopping into Target, I now have 2.26 shares at an average cost of $224.77, and I'm up overall $21.67, or about 4%. Now I do see Target as successful as Costco. Now I was up at one point about $80. As we can see, they're down about 1.8% just today, but I am not worried at all because historically they are going to go back up. I do believe in holding this company for 25 plus years, so I'm going to continue to all cost average in, which brings down my average cost and allows me to get more stocks at a cheaper price, which ultimately is going to give me more dividends. So I do see it as a win-win. Now the fifth payment that I got this month was from Main Street Capital. They gave me $2.05. At the time I had 10 shares and they were paying about 20 cents per share. Now hopping into Main Street Capital, I still have 10 shares at an average cost of $36.40, and then I am up overall $51.25, or about 14%. That is not a bad return at all. Main Street Capital is in the finance sector of my portfolio, but because they are considered a little bit riskier at that 5% dividend yield, I stopped buying more shares about 2 months ago, and they are not on my top priority right now. But in the future, I see myself getting up to about 25 shares of this stock, and I plan on them being the main stock in my finance sector, along with Chase Bank. Now the next payment that I got was from Pembina. They paid me $1.41. Unfortunately, they did withhold 25 cents, but at the time I had 10 shares and they were paying about 14 cents per share. And then hopping into Pembina, I still have that 10 shares at an average cost of $25.58, and then I am up overall $60.88, or about 23%. Again, amazing return on this stock. The only thing that keeps me from buying more, as we saw, is they are withholding some dividends. This is not necessarily a bad thing, but this means one of two things. Either their dividend yield is too high, or their revenue reports are a little bit ambitious. So for the time being, I'm just going to keep my eye on Pembina and continue to collect those dividends from them. But I am not going to buy any more shares in the near future. But hopefully that changes, because I really do like them. They are one of the top performers in my energy sector. And hopefully in the future they figure out what's going on and they either fix those revenue reports or fix their dividend yield. Now hopping into the next dividend payment that I got, and that was from Realty Income. They paid me $3.30. And at the time I had 14 shares and they were paying 23 cents per share. Hopping into Realty Income, as we can see, I still have 14 shares and that's an average cost of $60.32. I am up overall $69, or about 8%. And if you are a long-time viewer on my channel, you know that I took a huge risk with Realty Income. As you can see, I put about $1,000 in right off the bat. And this is because I bought into them at a really high price. And immediately after I bought into them, they went down about $5. So what I did was actually double down and buy about $1,000 worth of Realty O. And it did pay off in the long run. And honestly, now that there are a couple of other stocks that are at the same level as Realty Income, I can finally start thinking about buying more shares of Realty Income. The next dividend payment that I got was from Prospect Capital. I got $1.58, and at the time I had 26.37 shares, and they were paying about 6 cents per share. Now hopping into Prospect Capital, I still have 26.37 shares, and that's at an average cost of $6.15. I am up overall $42.50, or about 26.27%. Now with Prospect Capital being the highest dividend yielding stock in my entire portfolio, it's pretty amazing that I have such a great return, and they're paying me such a solid monthly dividend. I would say that with Prospect Capital, I did buy in at a pretty good time. I think they are a perfect weight in my portfolio currently. In the future, I might be able to buy more shares, and I'm completely okay with this because even if they go down tomorrow, I am still getting paid a consistent monthly dividend, and they make up about less than 2% of my entire portfolio. And then hopping into the second to last dividend payment that I got for this month, as we can see, I'm filming this a day early, so I have not got paid this dividend yet, but I am going to get 74 cents from PEY. And at the time I had 10.94 shares, and they were paying about 6 cents per share. Now hopping into PEY, I still have 10.94 shares at an average cost of $16.54. I am up overall $38, or about 21%. Not a bad return. This monthly paying ETF was one of the first stocks that I ever invested into. I stopped buying more shares because I felt pretty comfortable with the stock market after about 2 or 3 months, and I wanted to buy into individual stocks instead of an index fund. And then the very last dividend payment that I am going to get tomorrow is from SPHD. They're going to give me $1.84 because I have 14.46 shares and they're paying 12 cents per share. And then hopping into SPHD, I still have 14.46 shares, and that's at an average cost of $34.66. I'm up overall $119, or about 23%. SPHD, just like PEY, is an amazing monthly paying ETF that I did first buy into when I invested into the stock market. But as I said before, I'm super comfortable now with the stock market and investing into individual stocks. That's not to say that these ETFs are going to make it into my Roth IRA, because I'm like 90% sure I'm set on either SPHD or VOO. But if you are a beginning investor, these are great stocks to look into. So for all 10 dividend payments for the month of September 2021, I made $18.46, bringing my running total for the year of 2021 to $224.18. That's really not bad for passive income, and as we can see, we are growing month by month, and hopefully next year we're going to be in the triple digits when it comes to passive income on a monthly basis. Thank y'all so much for watching. It means the entire world to me. I love the fact that I have such a huge following of people supporting my journey to a $100,000 dividend investment portfolio. But that is going to be all that I have for y'all this week. Subscribe to the channel if you have not already so you can follow the journey yourself. Comment if you got any of the same dividend payments or you own any of the same stocks. I want to know what y'all are buying and what you have in your dividend portfolio. Don't forget to like the video because it does help out my growth so much. And I will catch y'all next week. Peace.